When US markets roll over after 2 days of dip buying, but Asia reverses up into the weakness. Are Asian institutions finally buying or is the execution bounce? When semiconductor bounce but healthcare and utilities finally break hard, is growth conviction returning or institutions abandoning defensive into the bounce? When all Asia markets reverse up together after 2 days of selling into US strength, is this institutional buying conviction or coordinated relief bounce? When volatility spikes 795 base point but yields barely move and crude continues lower, is this fear return or just profit taking into Asia bounce? When Europe finally breaks from the US bounce but Asia reverses up, is Asia leading recovery or is the Asia diverging from deterioration? Asia is minutes away, 5 signals, everything you need before the first bell. This is the Asia first look. Let's get into it. S&P 500 closed down 24 base points. Nasdaq Composite closed down 26 base points. Dow Jones closed down 1 base point. US institutions finally gave up on the dip. 2 days of buying failed to hold. Cash closed with conviction gone. But here is what happened in Asia. Nikkei futures implied up 60 base points. Japan reversed up. Korean futures implied up 44 base points. Korea joined the bounce. Hang Seng futures implied up 77 base points. Hong Kong led the reversal. Shanghai Composite futures implied up 66 base points. China also reversed up. Australian futures implied up 7 base points. Australia barely participated. That's the first signal. Asia reversed into US weakness. Volatility index up 795 base points to 18.87. Fear spiked hard on the US breakdown. Nasdaq futures repriced to plus 21 base points. S&P 500 futures to plus 13 base points. Dow Jones futures up 16 base points. Futures stabilized slightly on Asia bounced, but the volatility index tells you your institutions see the US dip failure as a contagion signal, not bottom. Crude oil selling 128 base points continued. That commodity breakdown persists underneath the Asia bounce. Which sectors are actually getting bought in Asia? That's the what sector reads confirms. Technology up 14 base points. Semiconductor index up 45 base points. Semiconductor bouncing harder than the broad tech tells you semiconductor demand conviction is returning modestly. But this bounce is small. That tells you institutions are not aggressively re-risking into growth yet. Financials ETF up 38 base points. Financials held and bounced. That tells you the yield move was enough to stabilize. Rate sensitivity. Healthcare ETF down 93 base points. That's the break. Healthcare crashed hard. Utilities ETF down 89 base points. Utilities breaking tells you the defensive sector rotation failed. Institutions are abandoning defensive but not committing to growth yet. Materials ETF up 67 base points. Industrial select up 22 base points. Industrials bouncing light tells you industrial dip buying is not conviction. Real estate up 36 base points, bouncing. Energy ETF up 9 base points, barely holding. Copper down 2 base points. Gold up 47 base points, but barely moving. Commodities holding tells you commodity breakdown paused but not reversed. Asia bounced but commodity support is fragile. Which sectors will actually hold? Asia's regional picture shows coordinated bounce into US weakness. Nikkei futures implied up 60 base points. Japan bounced after 2 days of selling. Tokyo saw US dip failure and bowed. That tells you Japanese institutions see US breakdown as opportunity. Korean futures implied up 44 base points. Korea also bounced and followed Japan. Hang Seng futures implied up 77 base points. Hong Kong led the bounce. That tells you Hong Kong institutions had conviction on the reversal. Hang Seng Tech futures implied data shows tech positioning joining. Taiwan futures implied up 42 base points. Taiwan semiconductor recovery positioning joined the bounce. Hang Seng financial futures implied up 145 base points. Hong Kong's financial sector bounced strong. Shanghai Composite futures implied up 66 base points. China bounced with developed Asia. Shanghai's bounce matched Hong Kong tells you Chinese institutions are also buying the US failure. STI index down 8 base points. Southeast Asia light, Australia up 7 base points, barely participating. Australian dollar up 16 base points. Chinese currency down minimal. Chinese currency barely moving tells you China capital is not aggressively committing yet. All Asia bounces but conviction is shallow. Volatility index up 795 base points to 18.87. Fear spiked hard. That tells you institutions see the US dip failure as a contagion signal, not bottom. The volatility index spike is sharp but from a normalized level. 10-year treasury yield up 9 base points to 4.25. 5-year treasury yield up 31 base points to 3.85. 30-year treasury yield down 8 base points to 4.88. 13-week treasury down 6 base points to 3.59. The yield curve barely moved despite volatility index spiking. Long duration barely moved. That tells you institutions are not selling bonds on the volatility index spike. Fear is returning, but growth caution is persisting. US dollar index down 4 base points and up 14 base points. Safe haven currencies mixed tells you institutions are uncertain, not panic, not confidence. Uncertainty about direction. Crude oil selling 128 base points. Confirmed. Gold up 47 base points, barely holding. Copper down 2 base points. Commodities fragmenting tells you commodity breakdown persists underneath the Asia bounce. Crude's continued collapse while Asia bounces tells you commodity markets still don't believe in the recovery. That's a real signal underneath the volatility index spike. Nikkei futures implied up 60 base points. Is Japan's bounce conviction? Tokyo bounced hard from the dip failure. If Tokyo opens and extends this bounce, Japanese institutions are committing to the reversal. If Tokyo opens and the bid evaporates, the bounce just algorithmic relief. Japan's execution determines Asia's outcome. Watch Tokyo's opening volume. If heavy on the bid, institutions are stepping in. If light, overnight bounce was just positioning. Korean futures implied up 44 base points. Is Korea's bounce participation? Korea bounced with Japan. If Seoul opens and stabilizes, Tokyo's bounce. Both developed markets commit. If Seoul rolls, Korea's conviction broke. Korea's execution is the pivot. Hang Seng futures implied up 77 base points. Hong Kong led the bounce with the strongest conviction. If Hong Kong opens and extends, Hong Kong's conviction pulls the region. If Hong Kong rolls, Hong Kong's leadership failed. Shanghai Composite futures implied up 66 base points. China bounced with developed Asia, but Shanghai's conviction is lower. Watch Shanghai's opening. If Shanghai extends, China's buying confirms regional reversal. If Shanghai rolls back, Chinese caution persists. Crude oil down 128 base points. Must stabilize for Asia's bounce to hold. Watch crude momentum. If crude extends lower, Asia's bounce fails. That's a watch signals pivot point. The signals are set. Asia has not opened yet. The first move always tells you more than everything you just heard. Japan opens first, that's your signal. Shanghai's first minutes, that's your confirmation. Watch which one the markets humbles from your own view. Watch the Japan, then come back and drop it in the comments. Did it deliver or did it surprise you? Join the community where market minds speak. I am James. See you in market.